Welcome to Investing Insights. I'm your host, Ivana Hampton. It can sometimes seem like there's an endless number of mutual funds for you to invest in, but not all of them are the right fit for your portfolio, and some aren't worthy investments at all. A popular feature for Morningstar's FundInvestor newsletter greatly shrinks the list and can help you home in on the winners. Russ Kinnel is the newsletter editor and senior principal of ratings for Morningstar Research Services, and he's here to brag about his thrilling funds list. Thanks for being here, Russ.
Glad to be here.
Well, let's start with the idea behind the thrilling fund list. How did this get started and what's the mission?
Yeah, so the real idea is let's focus on the things that are the best predictors that really matter the most for funds. So you could arrive at a screen and find your funds by doing a lot of screens. But what I think is maybe more important is instead to just limit it to just a few. And when you do that, that allows you to really raise the bar. So we're just going to screen on a few things, but we're going to be very demanding. And with 15,000 mutual funds out there, you can be pretty demanding.
And I'm glad you brought up the number because you start with thousands of fund share classes. How do you narrow the list to a few dozen? And what are you looking for?
Yeah, so I'm picky. So one of the key things is it's always good to start with expenses, right? So expense ratios in the cheapest quintile of the category. Returns, I want returns of at least 5 years under the current manager and have to have beaten their category benchmark, or in the case of allocation funds, their category return average. You also have to have manager investment of $1 million or more. And you have to have risk that's not in the Morningstar risk high bucket. The reason for that is that investors tend to do poorly with higher risk, really volatile funds because they tend to get too emotional about them. So we're going to screen that one out too. And so it's really just about having a few screens to find the very best funds.
Now, you said you're picky. I'm going to say you have high standards. 33 funds met those standards and made the cut, and they're all repeats. Did that surprise you?
A little bit. Usually we have a little turnover. It is a very stable list because of the things we're looking for. They tend to endure. And I think that also is somewhat endorses the process because it means you really are finding some good funds, and that they continue to have these characteristics, helps you to kind of stay on that path. Whereas I think if you pick something that's more fleeting, like 1 year returns or something like that, then inevitably you're going to be changing your funds all the time.
And what kept some funds off this year's list?
Well, the fee screen is probably the toughest one because you have to be cheapest quintile. So there's some funds that may kind of linger right around that borderline. Having to be a medalist is always tough because that means our analysts are always reviewing. The fund has to meet the high standards for medalists. So it's its own kind of high standards. So those are probably the most important things that knock funds out.
Now, a select group of these standout funds are making big bets. Let's start with the only thrilling fund from the diversified emerging markets category.
Yeah, so seafarer growth and income, and you'll notice that emerging markets isn't in the name. And so its bets are, interestingly, that it's got a little more in developed markets than a typical emerging markets fund. So it's got a decent amount in Singapore and a little bit in Europe. And then conversely, that is a lot less in China, the most emerging market fund. So it's kind of a risk-aware, well-run strategy, and obviously not that focused on being a pure emerging markets fund.
Now, a trio of foreign large growth funds from Fidelity are focusing heavily on financials and industrials. What's their story and what makes each of these funds unique?
Yeah, so we have Fidelity Diversified International, Fidelity International Discovery, and Fidelity Overseas. Let's start with Fidelity Overseas. That's maybe my favorite of the three. Vincent Montemaggiore runs that fund. He's kind of a Warren Buffett influence. You wouldn't think he was a clone of Warren Buffett. He's not exactly the same process, but Warren Buffett influence, fairly eclectic investor, very thoughtful investor who's done a really good job. And then I think International Discovery, if you're looking for an experienced manager, Bill Kennedy is a very experienced manager. Again, it's technically in growth, but fairly wide-ranging, fairly value conscious. And I would say the same thing about Diversified International. It's technically growth, but as you mentioned, it's got a fair amount in some of the sectors or outside of growth. So again, these are all kind of three wide-ranging funds, but each with some distinctive characteristics.
Can you describe the funds that are wagering big time on the tech sector?
There's a couple that come to mind. American Fund's New Economy, as the name sort of implies, is big on tech if you have a broad definition of tech. So information and communication services and tech, all of that kind of are in the fund's wheelhouse. It's a global fund, though it tilts a little more to the U.S., I think because of that mandate, than most of its peers. Another fund, Fidelity Contra Fund, it doesn't have a big overall weighting, but Will Danoff is a big fan of Meta and NVIDIA, so they're big bets in the fund. So in a way, I think of it as making big bets on tech.
Now, the healthcare sector has struggled this year, but some funds from Vanguard, Fidelity, and Dodge Cox appear ready to benefit from a rebound, right? Talk about those funds.
That's right. Healthcare has been down a bit, and tech's generally done better. So these are funds that have not performed that well recently. Obviously, their long-term results are still very good. So if healthcare does rebound, these ought to do well. One of the more interesting stories is Fidelity Select Healthcare, run by Eddie Yoon. And one of his favorite stocks is everyone else's least favorite stock, United Healthcare. It was the top holding. He's trimmed it a bit to the second position, and it's done terribly. But it's kind of interesting to think that obviously its performance is quite strong overall. So it's one of those really unusual cases of a fund that's actually managed to overcome poor performance from its top holding. And then we have names like Vanguard Prime Cap Core, which I own. And they've always had big weightings in healthcare. And then Dodge Cox stock, which has a more modest healthcare overweighting.
All right. So we got Vanguard, Fidelity, Dodge Cox in that situation. Let's move to fixed income. Where should fixed income investors look if they're considering tweaking that side of their portfolio?
Yeah, there's some really good ones here. Again, expenses are so important for bond funds. So having this tough test for bond funds really will help you to get a good one. So among the ones I like are Baird Core Plus Bond. Baird is a pretty cautious shop. This is them at their slightly more aggressive version, but they're just a really well-grounded firm that wants to deliver income and returns, but it will absolutely not take crazy bets to get there. Dodge Cox Income is another one I like. It kind of uses Dodge Cox's extensive corporate research to invest a lot in corporate bonds, and it's another very reliable fund.
And which income and dividend-focused funds are outshining their category peers?
Good question. I think American Funds is one of those ones that I always think of for dividends. So we've got American Funds, American Mutual, a large value fund, American Funds Income Fund of America, which is a global moderate allocation fund, and Vanguard Wellington and Vanguard Wellesley Income, which own dividend-paying stocks and kind of a core bond fund together. Wellesley Income heavier on the income and bonds, Wellington heavier on the stock side.
Got it. So this is an opportunity for everyone to size themselves up against your portfolio. So how can the audience test the funds in their portfolio against your thrilling fund list?
Yeah. On the Morningstar FundInvestor website, we have a fund selector tool that almost perfectly replicates this. You just put your ticker in and run it, and you see the results. You can also run some of these screens on Morningstar.com. I checked some of the other big financial websites like Fidelity and Schwab, and you can do some of these tests, but not all.
Got it. Well, maybe people should sign up for Morningstar FundInvestor.
I agree.
Russ, thank you for coming to the table and talking about this year's thrilling funds.
You're welcome.
That wraps up this week's episode. Thanks for making this show part of your day. A couple of reminders. Give Investing Insights 5 stars on Apple Podcasts to help others find the work we're producing for you. And subscribe to Morningstar's YouTube channel to watch new videos from our team. Thanks to Senior Video Producer Jake Van Kersen and Associate Multimedia Editor Jessica Bevel. I'm Ivana Hampton, Lead Multimedia Editor at Morningstar. Take care.